Welcome to TradeTheMBI.com. This is John. This report is for the 27th of September. And as we get close, we can see we're in a nice turnaround move. So the exacerbated dip to new lows all the way down to that 36. And you can see that was just matching of the previous dip. So effectively creating a double bottom that generating some support buying. Still, you can see from a year end so far, still down 21% on the year. That's pretty significant. Short-term buyers on the DOC here lifting it up. And again, we're still in a continuation, though, with this orange caught between the two. However, you can see that minus 20, minus 19 on the DOC red. So we're reaching that point where there's usually some kind of press back up, and often that attempt would be back towards the 23%. But I think first it's going to be the break of this low. That 0% was at 37.40. So that's what I'd be looking for as a topside push. It may not happen in a day, it may take a couple, but that's what the attempt would. Now, if you fall short of that, then I think we make new lows and things can get interesting. From an NQ standpoint, likewise, similar turnaround setup, almost identical readings from MBI as well as DOC. They're looking identical and check out pretty close to mirroring the S&Ps, but I think it's a little bit stronger. And you can see from the extreme histogram, no dips below the red lines, so there's no impending need for the market to retest those lows. From a euro standpoint, breaking down to new low 9.95. So when I was talking about the 0.93 when we were over the one range, wasn't that hard to tell where things were going to potentially break down to. And again, it's still a problem. It could ease off, and there could be a nice rally in the euro soon, as well as other currencies, to the dollar at least. Simply if oil continues its light fade, so the less pricing for oil, the fewer demand for U.S. dollars. Which subsequently would make other currencies, a little bit not more attractive, but you're not going to be in this massive dollar demand, which is really what's causing the spike. Not to mention the fact that interest rates continue to be extremely attractive from a foreign buyer standpoint, because you're not going to get any of that from the EU. And even if you did, what are you going to be buying? You're going to be buying bonds from Italy and Greece and the mix, supposedly backed by the EU. That's, I think you take the Fed over that any day of the week, which is exactly why the euro and that is fading. From a gold standpoint, no expectation for inflation on a recessionary potential. And that's been backing off since that sort of became clear. I mean, it was pretty evident once we talked about every Fed cycle. I mean, this was when we were talking about the original rate hikes. Every hiking cycle leads to some form of economic slowdown, recession. The question was just simply how far, how steep, and how long does it take? Some of those are still a little bit unknown. And like I've said, it's a question of if oil eases enough, that's probably going to do more to pair a recession than anything. But then you have the demand side of it. And if you're still restricting supply from various places, you're going to continue to have problems. So it could be more protracted. And that's going to be the market back and forth, is the debate between how protracted any downturn and how significant it will be for earnings and that impact. So here's oil, 78 range. Um, Not really making an attempt to make the move back just yet, but still in a weak spot, and that's makes things not as expensive. It just means, again, you're not getting a price reduction of any kind. You're just having a pause in the rate of increase, which I know they tried to tout that when it was July not moving, but it doesn't change the fact that things are still far more expensive than they were. It's just what it is. And I was suggesting in the Skype chat that we were having there that your potential for Bitcoin in that, because a lot of these other currencies there's really no fantastic solution there. What are you going to jump into the pound over the dollar? Are you going to jump into euros? No. So that makes a case for the crypto as an alternative bounce, and it held up pretty well in the weakness. And again, maintaining that hold of the 18,000 has been kind of critical. So you could be making the bull case for crypto, which can you imagine those words coming out of my mouth? Um, ETH, likewise, actually has been much stronger in general overall relative to Bitcoin anyway, and it's pretty decent by configuration. And the orange dip here is now below the green, almost below red, coming off a deep shakeout here. So typically what you get from that would be the first run, and as soon as that pivot of magenta is lower, you expect a retrace to that, and it's one of those where you're looking for a P2 effect that gets the DOC red back over that negative 13. Just FYI for that one. And from the 50K standpoint, short came down, but big turnaround bar on that one. It's one of those where earlier we could see the pivot up that started, and then once it continues, gives a nice momentum to it. And it was interesting because I just had a question about this the other day, looking at the higher time frames comparative to the 50K, and it's like, well, when I look at a daily that's in a sell, I get a buy signal from a 50K. All right, that gives me a mixed market indication. So when I'm looking at a 5K, in that case, I'm going with whichever one has the momentum. So if I get a buy signal on the 5K on that, I'm going to ride with it. If I've got a sell signal at a peak from the 50K as well as the sell signal from the daily, I'm letting my shorts run a little bit with that because I know that you're probably going to get a bit more of a sustained move. So that's why it's worth just taking a look and seeing where the market is in these particular cases. And in this particular case, now I'm getting a magenta spike here. So if I get a spike lower from the magenta at any point, then it's going to make the 5K more attractive from a short standpoint versus that initial buy signal, which usually has pretty strong momentum. From an intraday, we just had a lot of movement back and forth, and it was pretty good action overall as we slide across. And we would get some really good sell signals that just continued for a while. The lead of MBI white with these pumps, 50%, not uncommon in that particular stage. But as soon as that magenta crossed back over, led all the way back to the zero. It's very reliable from that standpoint. So it's definitely something to utilize. And then the little intermediate buys that came through, these should have produced better. I would have expected a move at least from the spike. If you don't get to that 50%, that's usually a warning signal because those should hit the 50% and not begin their breakdown. And when they do, that becomes problematic because it should reach the 100% when you get that kind of strength in a reading. And so when they fall short of that, you've got an indication there was plenty of selling into that setup. And while that was true, it just took that reset and finally did what it should do, which was move up to new 100%. So in the post market here, we can see big rally coming off of the dip into the European session. Big turnaround has started mid-morning here in Europe and taken off, of course, series of positive extremes going all the way back to the beginning, which would be right about there from a low 3679 range, and then the series of ones that took place on the secondary one. So I'm getting fill back on those. No shock with that. As always, though, look for me on the Skype chat. Trade well. We'll talk again later.